Hey guys, today is Saturday, March 14th of 2020. Welcome to Backstage with Millionaires. I'm Caleb, your host, and today we're going to be talking about some of the latest news that's been happening in India's startup ecosystem over the course of the last week. Now, it has been a bit of a slow week for startup news. I think everybody's been very focused on the coronavirus. Everywhere I look, on every newsfeed that I have on my social media, it's there. People are talking about this coronavirus. So in this video, I will not be mentioning that coronavirus at all. I'll give you a little break from that, and we'll be talking about some other things instead. So the first news item that I wanted to discuss was that Flipkart's parent company, Walmart, according to a report from Times of India, has told Myntra that they need to start focusing on profitability. Now, this hasn't been confirmed yet by Walmart or Flipkart or Myntra, so take everything that I'm saying with a grain of salt. I'm just parroting Times of India. However, their source did say that Walmart told Myntra to cut its losses even at the expense of growth. Now, the obvious question to ask here is why? Why is Walmart doing this? Why is this happening? And I think that the answer to that question is actually pretty simple. Walmart wants to stop losing money on Myntra. During the financial year 2019, Myntra reported a loss of 239 crores. That's about 5 billion rupees. And that's a 250% increase from financial year 2018. So what does this mean for everyday people? Well, online fashion, unfortunately, is probably going to get a little bit more expensive, especially when you consider the fact that Flipkart Group owns about 70% of India's online fashion market. You can also expect to see fewer discounts on Myntra's website, as well as a reduction in their inventory. Now, this inventory reduction is happening because of two different reasons. First of all, according to the report from Times of India, Walmart has told Myntra to shut down any warehouses that don't meet Walmart standards. And then secondly, Myntra will be reducing their inventory in order to access more working capital. All right, next up in the news, Cartrade, which is an online marketplace for new and used cars, has applied for an NBFC license with the Reserve Bank of India. Now, Cartrade does have a couple of different partnerships with banks and other financial institutions so that they can support the car buyers on their platform. So getting this NBFC license is going to help them to further support their existing customers, and it's also going to help them to incentivize new customers to start using their marketplace. This NBFC is also Cartrade's way of positioning themselves to capitalize on the opportunity that is the $30 billion used car market here in India. Only 5% of this market has access to organized funding, and so Cartrade is hoping to change that. Now, apart from obtaining this NBFC license, Cartrade is also looking to raise its IPO in the next 18 to 24 months. Now, we actually talked about this in a previous news video, but loss-making companies aren't actually allowed, according to the law, to go public in India. However, Cartrade is one of the few Indian startups that's actually profitable, so they're well positioned to go public. They're expecting to end this financial year with 425 crores, that's 4.25 billion rupees, in revenue, and 125 crores, that's 1.25 billion rupees, in profit. All right, next up in the news, Mukesh Ambani has lost the title of richest man in Asia to Alibaba's Jack Ma. On Monday, the 9th of March, the stock prices of Reliance Industries plummeted as a result of the collapse in the price of oil. Now, Reliance Industries is heavily dependent upon their oil business, and with Mukesh Ambani holding about 42% of the company's shares, he lost about $5.8 billion seemingly overnight. With this huge loss, his net worth is now sitting at $43.4 billion, which is $1.2 billion less than Jack Ma, whose net worth is $44.6 billion. All right, moving on to some funding news now. Japanese VC firm Strive, formerly known as Gree Ventures, has raised more than $100 million for its third Asia-focused fund. With this fund, Strive will be investing anywhere between $300,000 and $1 million into B2B, SaaS, and deep tech startups here in India and Southeast Asia. Strive recently opened an office here in Bangalore so that they can help support their portfolio startups while also expanding their portfolio in the country as they become more and more a part of India's startup ecosystem. Some of their Indian portfolio startups include Class Plus, which is a classroom management app provider, MedTrail, which is a SaaS platform for doctors and health providers, and PopXO, which is an online platform for women in India. All right, next up on the funding news, Northern Arc Investments, which is a subsidiary of Northern Arc Capital, has marked the first close of its India Impact Fund at $23 million. Now, this is the 8th fund of Northern Arc, and they've set a target of $100 million. And with this fund, Northern Arc is looking to make between 15 and 20 different investments ranging from $3 to $5 million across sectors like microfinance, small business finance, vehicle finance, and agri-business finance in the next 12 to 18 months. This particular fund has received investments from global investors like PG Impact Investments, Anthos Fund Asset Management, and Calvert Impact Capital. All right, next up in the funding news, FamPay, which is a teen-focused payments app, has raised $4.7 million in seed funding. These funds were raised from investors like Y Combinator, Venture Highway, Sequoia Capital, Global Founders Capital, Twitch co-founder Kevin Lin, Robinhood co-founder Vladimir Tenev, Cred founder Kunal Shah, and Pine Lab CEO Amrish Rao. These funds will be used by the startup to boost their technology infrastructure and also build an engineering team. Founded by Kush Taneja and Sampav Jain, FamPay is a payments platform that enables teenagers to conduct digital and card-based payments. The startup is partnered with IDFC First Bank to help teenagers get a card without having a bank account. They also let parents top up their child's FamPay account while their child spends the money under their supervision. And the last piece of funding news that I have for you guys today is that online event hosting platform Airmeet has raised $3 million in their seed round. Investors that participated in this round include Accel, Venture Highway, Global Founders Capital, Redbus co-founder Panindra Sama, LiveSpace co-founder Ramakant Sharma, and Unacademy co-founder Gaurav Munjal, among others. Airmeet will be using these funds to strengthen their technology platform and also expand the types of events that they can host. Founded by Lalit Mangal, Vinay Kumar Justi, and Manoj Kumar Singh in 2019, Airmeet provides an all-in-one platform to host live events ranging from private interactions to large conferences and webinars. Using Airmeet doesn't require you to download anything. Event organizers and attendees can manage and join events directly from their browser. And according to the startup, the platform can handle up to 1 million attendees at any given time. All right, that is all the startup news that I have for you guys this week. I hope you enjoyed the video. And as always, I'm curious to know, what did you guys think of some of the news items that we talked about today? For example, Mukesh Ambani losing a little less than 12% of his net worth and going from the first wealthiest man in Asia to the second. Now, I don't know about you guys, but I lose about 12% of my net worth if I decide to go and eat a meal at McDonald's. So I'm not really sure if I can put myself in his shoes exactly, but I'm trying to imagine what he must be going through. Do you think he's sad? Do you think he's upset? Do you think he's angry? I mean, this is sort of something that he probably couldn't have seen coming, right? The oil prices plummeting like they did. I mean, if you were in his shoes, how would you be feeling? Let me know in the comments down below. And then Walmart reportedly telling Myntra that they need to start focusing on profitability. What do you guys think about that? I mean, do you think that the prices are going to go up dramatically? Are they going to, increase slowly and no one's really going to notice? I mean, I'm personally not really too invested in India's fashion market, but maybe you are. So if you are, let me know in a comment. And then Cartrade trying to get their MBFC license and then also thinking of going public. I mean, do you have any thoughts on that? Everything that we talked about is fair game. Just let me know in a comment down below. I would love to hear from you guys. And I would also love it if you could share this video with anybody that you think would enjoy it. Thank you so much for watching this episode of Backstage with Millionaires, guys, and I will see you in the next one.